Hello, everyone. I am David Elízaga, CFO at eDreams ODIGEO, and I will take you through our third quarter fiscal year 2025 results for the 9 months ending on the 31st of December of 2024. eDO continues to show very strong growth in Prime subscribers, and cash margin or profit margin continues to build as the maturity of Prime members increases. In fact, cash margin or profit margin for Prime for the last 12 months was up 8 percentage points over the last year to 46%. In addition, we added 305,000 subscribers in the third quarter of fiscal 25, and today we are already above 7 million members and are on track to meet our self-set targets for fiscal 25. As mentioned, our profit margin has increased significantly due to the strength of our Prime model and the increasing maturity of Prime members. This has resulted in cash EBITDA growing 40% year on year and 70% versus the same quarter of the previous year. Some of the key highlights for today's presentations are: first, in the first 9 months of fiscal 25, the strength of the Prime model drove significant growth and has guided improvements in profitability. Prime members grew 26% year on year, reaching 6.8 million, with net adds at 305,000. We are on track to reach our 3.5-year-old self-imposed fiscal 25 target of 7.25 million members. Cash marginal profit for the first 9 months was 201 million euros, up 27% year on year, and the margin had a 6 percentage points improvement, reaching 38%, and that was 41% in the third quarter alone, making progress towards the guidance of 42-43% for the second half of the fiscal year. Cash EBITDA for the 9 months of fiscal 25 was 124 million. That's up 40% year on year, and cash EBITDA margin improved 6 percentage points versus the first 9 months of fiscal 24. More importantly, free cash flow ex non-prime working capital grew even more and was 69 million euros in the first 9 months of the fiscal year versus 36 in the same period of the previous fiscal year. This is a 33 million improvement year on year, a remarkable increase of 91%. As a result of the strong free cash flow, the company has already repurchased in the first 9 months of fiscal 25 40 million euros of its treasury shares as part of our ongoing equity share buyback program for a total amount of circa 90 million euros in the aggregate of the fiscal year, and we will continue to buy more, taking advantage of how undervalued we think our shares are. The second highlight of the results is that the Prime model continues to drive very strong growth. The growth in Prime more than offset the anticipated decline in the non-Prime side of the business and resulted in significant improvement in our overall profitability. Prime cash revenue margin for the first 9 months of the fiscal year grew by 19%. Following the strong growth in members and as guided, partially offset by a lower ARPU. Prime cash marginal profit for the 9 months of fiscal 25 grew 43%, and the margin had an improvement year on year of 8 percentage points. And Prime cash EBITDA for the first 9 months of fiscal 25 grew even more as we started to leverage a more stable fixed cost base. Together with a strong top-line growth, Prime cash EBITDA grew 52% and the margin expanded 7 percentage points. The third highlight of the results is our outlook. eDreams is on track to meet the 180 million cash EBITDA target. In Prime members, the target of 7.25 million, and we are on track to achieve as well free cash flow ex non-Prime working capital of over 90 million euros, more than double versus fiscal 24. All of this growth has been delivered despite many industry and other headwinds over the past 3 years. As guided in the first quarter of fiscal 25, it is important to highlight that we expect to see better year-on-year comparatives in the second half of the fiscal year, as our member base continues to increase and the maturity of our Prime member grows. Year-on-year comparatives for the remaining of fiscal 25 are expected to be as follows. Prime members in the second half of the fiscal year are expected to grow around 24% versus March 2024, and cash marginal profit margins are expected to be around 42-43% in the second half resulting in around 40% cash margin or profit margin for the group for the full year fiscal 25. Looking into the future, for fiscal 26, we have made public at our Capital Markets Day 3 new targets. The first one is Prime members, adding over 1 million of new members in the fiscal year. For cash EBITDA, a range of 215 to 220 million euros, and a generation of free cash flow ex non-prime working capital of over 120 million euros. In longer term, we have also said that Prime members will grow in excess of 10% in fiscal 27 and fiscal 28, which shows once again eDreams has a strong fundamental growth potential beyond fiscal 25, being significantly underpenetrated in our main markets. In sum, Prime's proven model continues to drive very strong revenue and profit growth, and it has delivered a significant uplift in profit margins. We believe we have the right model, the right people, and the right structure to seize and deliver on the exciting shareholder value creating opportunities ahead of us. eDO profitability was up significantly due to strong growth of Prime members in the second and subsequent years of the subscription, and cash margin or profit margin for the Prime segment reached 46%. Cash EBITDA also rose significantly. In the third quarter of fiscal 25, our last 12 months Prime cash margin or profit margin continued to advance. It increased to 46% from 38% in the third quarter of fiscal 24, an 8 percentage points improvement. Group cash EBITDA for the last 12 months also improved substantially. In the third quarter of fiscal 25, cash EBITDA margin reached 22% versus 17% in the third quarter of fiscal 24, an improvement of 5 percentage points. Let me remind you that when looking at Prime versus non-Prime, we still think it makes more sense to look at our business on a last 12-month basis, as Prime is an annual subscription business, and the non-Prime part is quite influenced by seasonality patterns. Our KPIs reported today show strong growth and significant marginal profit uplift. Cash marginal profit was up 25% over the last 12 months, as we have more Year 2 Plus members of Prime. Also, Prime's strong growth more than offset the anticipated and planned decline in the non-Prime side of the business as we focus on Prime. We continue to be selective on how we spend marketing, and we put more focus on Prime products versus developing products and services for the non-Prime side of the business. As we discussed at our first half results presentation, in the third quarter, we have moved past the 1-year period of intermittent access to Ryanair, which had a meaningful impact on the non-Prime business. This has led to a reduced decline compared to previous quarters, with the third quarter of fiscal 25 down only 6%, compared to the third quarter of fiscal 24. That's a notable improvement from the 17% decline in the first 9 months. The evolution in the non-Prime side of the business contributed to a consolidated 10% increase in revenue margin and cash revenue margin in the third quarter of fiscal 25, compared to a 3% increase during the first 9 months. This growth is encouraging, especially considering that the strong growth rates in the Prime business were previously offset by the challenges in the non-Prime business, partly due to Ryanair. eDO is fundamentally a subscription business focused on travel. Over the last 12 months, Prime has delivered 67% share of group cash revenue margin and 83% share of group cash marginal profit versus 58 and 71% a year ago. There should be no dispute now that we are a subscription-based business and should be valued as such. As we now have a much larger proportion of our Prime members who have renewed their subscription for a second year and a third and a fourth, the level of profitability of Prime continually improves. Now I will take you through the financial results in more detail. In the 9 months of fiscal 25, we delivered a strong growth in cash EBITDA and substantial improvements in margin as the maturity of Prime members increases. In the 9 months of fiscal 25, cash revenue margin was 3% higher than in the first 9 months of fiscal 24 and up 10% in the quarter. Cash marginal profit and cash EBITDA improved by 27% and 40% respectively between the 9 months of last year and this year. If we look at the comps quarter on quarter, cash marginal profit improved by 41% and cash EBITDA by 70%. Over the past year, our subscribers have grown by 26% to 6.8 million, and our ARPU was reduced by 5.5 euros. As guided in the first quarter of fiscal 25, we have given more discounts to our Prime members, as our algorithms indicates it is better for LTV. As a result of all the above, ARPU is expected to continue at around the mid-70s for the remainder of the year. Coming back to our 9 months P&L, 70% of our cash operating margin and 87% of cash marginal profit in the first 9 months of fiscal 25 are now from Prime members. As guided, eDO profitability was up significantly due to strong growth of Prime members in year 2+. Cash marginal profit margin increased to 38% for the 9 months of fiscal 25 from 31% in the 9 months of fiscal 24. That's a 6 percentage points improvement, and 41% in the third quarter of fiscal 25, making progress towards the guidance of 42-43% for the second half of fiscal 25. Cash EBITDA margin in the 9 months also achieved very substantial improvement and stood as 23% versus 17% in the 9 months of fiscal 24. Cash EBITDA stood at 124 million euros in the first 9 months of the year, up 40% year on year. Overall, we are very confident that we will meet our self-imposed fiscal 25 targets of 7.25 million Prime members and a cash EBITDA of 180 million euros. eDreams has huge potential and is delivering superior returns for shareholders and customers while transforming and revolutionizing the industry. Furthermore, we are confident in the growth and profitability outlined in our fiscal 25 and longer-term guidance, and also believe the company's worth continues to be unrecognized and undervalued. As a result of this, and due to a strong liquidity and balance sheet, we will continue with our daily repurchase program, and we will consider subsequent share buybacks as we continue to generate free cash flow on an ongoing basis. I would like to conclude by highlighting the strong fundamental growth potential we have beyond fiscal 25. When we announced our self-imposed target for fiscal 25, there were a lot of macroeconomic events that were not forecasted at the time. No additional waves of COVID, such as Omicron, no macroeconomic concerns of 22 and 23, resulting in high inflation and significant economic uncertainty. And travel was expected to be at pre-COVID levels much sooner than what actually happened. Yet despite these headwinds and some others, we have grown our business very strongly in terms of Prime members, profitability, and actual amount of profits. Underlying this is our relentless focus on building a great platform and a great customer experience. We believe we have growth potential far beyond fiscal 25 with a proposition and business model that is successful and will continue to thrive. Thank you very much.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.